All right, in this lesson, we are going to give you an overall understanding of what accounting is, and then we're also going to point you in the right direction of where we are taking this course from an accounting standpoint. So that's our goal at the end of the day. So the first thing that we should talk about is, let's talk about what is the goal of accounting. Well, the goal of accounting includes taking data and doing something called accounting to it. And then from there, we will summarize whatever results that we have, which we would call creating information, to help users of that information make decisions. So we're taking data, we're trying to figure out if that data is needed or not. Once we figure out if it's needed, then we will do something called accounting, and then we'll transform that data into information that external users can then use to make decisions that they need to make, whatever those decisions might be. Okay, so that's what we're trying to do. Now let's focus here on this middle one here on accounting. So this accounting, well, if we boil it down, accounting is all about analyzing the data that we get and then processing it or recording it in a systematic way. What do we mean by systematic way? So the systematic way here, or systematic process, is all about taking like data that we get and processing it the same way, typically in an efficient way, so that we're able to produce good information at the end of the day. And that's, again, is the last thing that we do, is we're going to summarize our data into reports that users of those reports can make decisions on. So that's what we're trying to do in accounting. Now, when we talk about accounting here, we also have two general categories of accounting. Those two general categories include financial accounting and managerial accounting. Now, there are two different sets of users that use one versus the other. When we talk about financial accounting, we're talking about producing information for external users. So those external users are people outside the organization, typically outside of management. They need information in order to make decisions on the corporation or the company that they are looking at. And we'll talk about those decisions later on. Further on the other side, we have managerial accounting, and that is information to help internal users. So internal users need information to make decisions. So they need information on what was the cost of labor over the last quarter. And once they get that number, they can make decisions on whether or not they can cut labor in the next quarter, increase labor costs in the next quarter. What do they need to do in order to make the organization successful overall? So that's kind of what managerial accounting does. So notice that we have two different audiences here. They're going to get two different types of reports based on what they need to make better decisions. Now let's talk about some main differences between financial and managerial accounting. When we talk about financial accounting, obviously we said this is information, or this is a type of accounting that we use to help external users make decisions. So we're going to give external users this information. Now, what we're giving them is basically what we call broad-based financial statements. What do we mean? We're not going to give them the details of everything in the organization financially. We're going to give them, summaries. We're going to give them broad informations because we don't want competitors to know what's actually going on. Now, obviously, if we could, we wouldn't disclose any of this, but a public company must disclose this, and this is why we're talking about it. So what's okay to give our competitor maybe our total sales? So we did $50 billion of sales last year. But it's not okay to, let's say, tell them that it costs us $3.25 a widget in order to produce whatever product we are. Because our competitor may be able to look at that number and go, wait, if they're producing it for $3.25 and we're producing it for $5, they've got a competitive price advantage over us, which is why we're not bigger than they are. So then they're going to fight and scrimp as much as they can to get it down to 325 or less to be more competitive with us. So we don't want our competitors to know what our costs of those goods that we're producing are, because it becomes a competitive advantage for them. So broad-based, we'll tell them that we did 50 million in sales. We just won't give them the details when it comes to what our cost of our product is, or whatever other type of information we would give to internal users rather than external. So broad-based, very broad information that gives them enough information to make a decision. External users like shareholders, but not enough to give them the very detailed that loses our competitive advantage. Now, these financial statements are typically produced annually, so they're produced once a year. Most of the times they're also produced quarterly as well, but it's going to be dependent on whether or not they're public or private or whatnot. But we produce these kind of on a basis, whatever that means. So every quarter or every year. Now, this is different from managerial accounting, and that managerial accounting is for internal users. So it's for managers to make decisions within the organization to move forward towards their goal as a company. Now, for internal users, they care about reports to satisfy decision making that they are doing. So these are not necessarily broad-based. These are more specific to what decisions this manager has to deal with or to monitor as part of their job. So we might go ahead and give this internal user the cost of a product, because then they can look and see, how do we get the cost down from 325 to 295 or 305. So they need that information. Otherwise, they wouldn't even know. They wouldn't be able to keep track of exactly how much it's costing them, and therefore they would never know if they're profitable or not. So we're going to give them very detailed information so that they can make better decisions to hopefully fulfill the goals of the organization. Now, these are produced whenever a manager needs to make a decision, or on a very frequent basis. So it might be every week, it might be every day, it might be whenever the manager is about to make a decision. He or she's gonna ask for a report stating the information that they need in order to make a decision about X, Y, and Z. So notice that managerial accounting, it's kind of like an on-demand type of thing, not necessarily always, but it's kind of an on-demand. Whereas financial accounting, it's on a period basis. So that's kind of the difference here when we talk about the reports that they might have. Now, for this course, our job is to focus directly on financial accounting. So we are looking at financial accounting. More specifically, we're going to teach you how to prepare financial accounting reports, or what we call financial statements, for the external users. So our job is to provide information to external users in this course, not internal. So we're not going to look at maybe the per unit basis of an item or the exact cost of sugar, but we are going to look at kind of the overview of what information we want to provide to external users, just enough so they can make decisions based on that information. So who are these external decision makers? Well, these external decision makers are kind of everybody that is not internal management. So here are some examples of external decision makers. We've got investors and shareholders. These are people that want to invest in the company. So they need information on whether or not the organization is profitable or not. If it's profitable, maybe they will invest. If it's not profitable, maybe they won't invest. So they need information before they make an investment. Creditors need this information because they want to know, will they get paid back if they're going to lend money to this company? And so the financial statement gives them information on whether or not they can pay back their debts that they take out. Directors need this. So what is a director? A director is usually voted on by shareholders. So shareholders vote in directors. The directors are not necessarily employees of the company, although they can be. But these directors act on behalf of the shareholders. So shareholders hire the directors. The directors act on behalf of the shareholders, but the directors also hire the executive management. So the professional executive management, like the CEO, that's who the directors are going to hire. And then it's the professional manager's job to manage the whole operation of the organization. hopefully in accordance with the board of directors, because the directors answer to the shareholders, and the shareholders at the end of the day want to see shareholder value increase based on their investment in an organization. So directors need that information to make sure that the company is going the right way. Okay. And then government obviously needs it for tax purposes, excise fees or whatnot. They are going to be important external users to the financial statement so they can verify all the reports that the company is sending them. So those are external users. Now, what do they want with this information? Why do they need this information? Well, really, it's three things that they're trying to make a decision on. Now, I'm going to specifically focus on shareholders, but this can go for debtors. This can go for government. This can go for a different amount of external users, but it makes sense to talk about it in a investor situation. So for investors, they needed this information to do one of three things. The first thing is to hold security that they already own. So they already own investments in the company. Do they keep holding that investment? So that's one decision they need to make based on the information that they get from the company. The second decision that they might want to make is maybe sell those securities that they already have. So they might have securities in an organization, but they're seeing their profits decline. As the profits decline, that also means it's probably time to exit out the investment. And so that's a decision that they're making there. The last one here, purchase securities of the company. So maybe someone or investor is looking to invest in a company. Well, they need this information to figure out if they want to invest. So the way that I like to look at it is every external user is trying to make a decision on whether or not they're going to buy, hold, or sell their investment in that organization. How does that deal with creditors? Well, creditors need to know, do they issue more credit? Do they leave the credit they've already issued to them alone, or do they need to recall their credit because they don't think that the company is going to pay them back over the amount of time they had speculated when they actually gave the loan to the company? So that's what we're trying to do here for external users. We're trying to give them the information so they can do those three things. Now, how do we communicate these results at the end of the day? So we've already skimmed over this a little bit. So let me remind you, at least for financial accounting, managerial accounting, we'll talk about it a little bit more. But for financial accounting, we're going to do this by issuing financial statements to external users. Now, when we say that, sometimes we're not actually delivering these to the external users. We're simply preparing them and putting them on our website. And then the external users can come to our website and then download that information. But basically, we're going to issue financial statements so that they can then use to make decisions. What about internal users? Well, those internal users are getting internal reports. So maybe it's just a report that's printed out and sent to them or emailed to them. It could be a dashboard. So a dashboard is kind of like online banking. If you go on online banking, you kind of see a dashboard of how much money you spent. And nowadays it's how much money you spent, what categories you spent, how much you still have in the account, how much deposits you have. That's a dashboard. Except for a company, it might be production hours, cost of goods sold, total revenues, productivity by employee. So there's a lot of these different dashboards that I can log in and I can kind of see on my screen, oh, this is what's going on right now. And it's usually connected to some kind of financial resource or software that can pull that information directly to give them real-time access to that information that they might need. So that's kind of the broad overview of what accounting is, and then painting the direction that we are going. Financial accounting. We're all about the external users, not the internal users. We're all about those perfect reports that we need to get right. We don't really care about what those external users exactly want, as long as we're providing them broad-based financial statements. So we're not going to care about these detailed reports that we might need for management. So that's this lesson on understanding the basics of accounting. Hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, it's Patrick. Before you skip ahead to the next section, just wanted to come on here and tell you to not forget to like this video and maybe share this video with someone that you know that would get a lot out of this lesson. Maybe a classmate that you know. This would be a great way to introduce them to this channel. So share this video with them, maybe your mom or your dad. someone so that they know that you're really learning accounting topics here on YouTube and you're not just playing cat videos over and over again. Now, if you want to help us grow this channel, what would be great is if you press the subscribe button and maybe even turn on the notification bell if you want to get alerted the next time we upload a video to this channel. And put in the comment section below, what did you eat last night? It would be so weird for people to come and look at the comments, but what did you eat last night? I might throw in a comment after you if you put that in the comment section below. So do that now. What did you eat last night? All right, so enough of the fun stuff. Hope you enjoyed this lesson, and we'll see you in the next video.